The mother of all crashes is supposedly upon us, as Michael Burry tweeted out. And the economic climate is absurd right now, with the index funds hitting all-time highs, the new infrastructure package, as well as rates being at all-time lows, the real estate market absolutely booming. And to top all that off, the economy is slowly opening back up again. And well, Michael Burry, a very well-respected investor, actually tweeted out this tweet. People always ask me what is going on in the markets. It is simple. Greatest speculative bubble of all time in all things. By 2 orders of magnitude, hashtag FlyingPigs360. And yes, Michael Burry has now come out and basically stated how he thinks we are in a massive speculative bubble again. He's come out and stated this in a couple interviews, saying how the crypto markets are very speculative at the moment with all this leverage, as well as stocks being grossly overpriced. Robert Kiyosaki, the famous author of Rich Dad Poor Dad and the Cash Flow Quadrants, has also expressed his concerns as well. There's a recent Reddit post that's gained a lot of traction recently explaining the 2008 financial crisis and how that might actually be very similar to what's happening on today. I did actually make a video on that not too long ago, so link in the description. Right after you watch this video, take a look at that one. So in this video, I'm going to jump in what should cause this, what we should look out for, what will happen, and most importantly, how you can get out ahead of this entire mess. So if you guys don't know Michael Burry, well, he was the star in the 2015 movie The Big Short. So he actually shorted the real estate market starting in 2007, and everyone criticized him immensely. And then again, the 2008 financial crisis happened, and his fund blew up with many millions of profits. He made over $750 million for himself just off that one transaction. However, that happened over a decade ago, and what's his relevance today? Well, he started shorting Tesla in the beginning of the year, and now that's dropped to 35%. He also guessed about post-reopening inflation once the economy reopens after this whole mess with the illness, and well, that's happening too. But furthermore on that, he also guessed a recession in Bitcoin, and that's dropped over 50%. However, I want to make things clear, he is actually bullish on Bitcoin entirely. He manages Scion Capital, and their gains have been crazy the last decade, always overperforming the market, and over 100% return in the 2008 financial crisis. And I want to bring up another tweet of Michael himself, and it reads, "The problem with hashtag crypto, as in most things, is the leverage. If you don't know how much leverage is in crypto, you don't know anything about crypto, no matter how much else you think you know." He tweeted that out on June 17th, 2021, so as we can see, it is very recent times that he's actually making these shots. There's also been other articles out there explaining how crypto has been leveraged up to 100 to 1 times. And that's enough leverage to collapse the entire market, especially if people are borrowing on borrowed money. Once enough selling momentum comes, it will force others to sell, which will force others to sell, and everything will just collapse on itself. And yes, the majority of this crypto stuff is still unregulated, so this is not out of the realm of possibility. Burry's claiming that the market is on a knife's edge at the moment, and it's full of speculation. Burry also claimed how there is widespread speculation and people are using too much leverage with borrowed money to then bet on other speculative investments. He also stated how he warned people last time, but no one listened, and this time it's the same deal. He's warning and still nobody is listening, although he states that he has proof, so when it actually does happen, he can say, "I told you so." So the reality is this actually coming, or is this again just a blank shot in the dark that hopefully it will actually pan out to something, and if it does, well, he's a genius. Furthermore on that, how can you actually get ahead if this all does go to shit? And are we actually in a bubble at the current moment? First of all, you actually have to define what a bubble is, and essentially a bubble is when something is priced at a ridiculous amount compared to its true intrinsic value. But to actually do that and come up with an intrinsic value and a dollar amount is very difficult, and that's what separates the great investors from the amateurs. And the prices are so malleable and subjective to the current monetary policies that the Fed come out with every other day. Also, there has been a massive wave of new investors that have recently hopped on the train, so all their new money can actually change things as well. However, is the stock market in general overvalued? Well, to answer that, it's kind of difficult as well, because do you look at the past to try to determine the future? However, the past is different situations than the current situation. But we can also look at different ratios, such as the price to earnings ratio, to try to determine something. So here's our really quick crash course on the previous crashes. So 1929, the Great Depression. So people borrowed a ton of money and invested in stocks. It was pretty new thing at the time, and a lot of banks just lent out as much money as they wanted. At this time, people believed stocks were stonks because they just never went down. But once they appreciated so much and people wanted to cash out their millions, well, coincidentally, everyone else wanted to cash out their millions as well. Therefore, giving an immense amount of selling pressure, and once people trying to sell, well, there's too much and people just couldn't sell everything. So then people tried to sell, but they couldn't get out of their positions. And people trying to get out of the positions couldn't get any cash because there wasn't any cash, because the banks actually loaned everything out to other people to invest in the exact same stocks. This led to an 83% decline in those subsequent years and just destroyed everyone. But hopefully the current financial system doesn't fail us like back then and actually doesn't overextend themselves this time. But I want to look at the Shiller PE ratio, and Shiller actually won a Nobel Peace Prize for this price to earnings ratio. And it's quite self-explanatory. It's just the price that you pay and the earnings that you get from that price that you paid. Which, just for context, on Black Tuesday, the Shiller PE was at 30, and well, currently we're at 37. And yes, those are actually quite high because the average market is around 15. However, this isn't just some crazy astronomical price where it's going to definitely melt down tomorrow. And this might be a little bit skewed because the current economic slowdown the past year will actually push the price to earnings ratio up because the prices are not reflective of the earnings because the earnings were slowed down. But looking at it cyclically, the Shiller PE is actually pretty high and it's almost the same levels as 1929, which that's not very good. However, the current economic climate is vastly different with crazy monetary policies, stimulus packages, rampant inflation, and people just don't even know what to do. One crash that was absolutely massive was Japan in the 1980s, and that was when real estate was hiking up so heavily. Japan still hasn't actually reached the same all-time highs that it did over 30 years ago. However, I don't really like to compare these because it's not really apples to apples. Their economic structure is vastly different than the United States, as well as their bubble in the 1980s with real estate was over double the dot-com bubble here in 1999. Hence segueing into the dot-com bubble, and that was when people just were so flush with cash and they just wanted to put it in any tech companies that they could. If it said .com, people were throwing as much money as they could at it because they were really excited for the future. However, with all this excitement and enthusiasm, it didn't really pan out because the financials behind these companies were not great. Many of them weren't profitable, and the vast majority of them just collapsed after a couple years. They say about 80% of the tech companies actually ended up going bankrupt in the subsequent years, and the ones that actually did survive took a massive beating. However, if you look back on them today, they were bargains. Look at Amazon. Amazon was down to about $16 from its crazy highs. And moving on in chronological order, it brings us to 2008. And this is the mortgage crisis, when banks gave out too much money to people who weren't qualified, and therefore those people who weren't qualified actually defaulted on their mortgages, and people started getting kicked out of their homes. Well, the market collapsed and the Fed stepped in to try to save the day. Michael Burry is known across the world for his crazy callouts that have actually come true. However, he has made a couple callouts that haven't panned out. In 2017, he said that there was an imminent plummet coming, and well, that didn't really happen. And there was a couple others that he actually claimed to and never really panned out either. So technically, he wasn't really right, but he didn't really put a time limit on them either. However, once you actually get over like 5-6 years of that claim, is that claim really valid anymore? Or is he just spreading a ton of FUD in the markets and just scaring the shit out of everyone? However, I am also in the media business here on YouTube, and I understand you gotta get clicks. And the person that says there is an imminent crash coming bigger than any other crash in all of history will definitely get more clicks than the guys like, I will get 5% over the next 10 years. So the validity of him actually saying the everything bubble is upon us, well, I don't really know the validity of that. So how truthful is this crazy claim? Well, I don't really know because the monetary policies seem to change every single day, and that changes the market's performance immensely on the daily. So how do you get ahead of all this mess? Well, you'll do the exact same thing that people have been doing for the last 100 years and been making money. You consistently invest in the market because the overall market just tends to go up. And yes, there are crashes here and there, but in the grand scheme of things, they're not even that big. If you just can wait them out for a couple of years, that is more than enough time for them to recover and start making you more bread. There has not been one scenario where people have invested $1, waited 20 years, and actually had a negative return. It's always been positive, and well, for the foreseeable future, I am betting on the United States actually producing more and more wealth. The reality is real estate will probably go up as well, so even if I buy them at all-time highs now, in 20-30 years, they'll still make me a profit. However, crypto is a little bit different because it's still very speculative and unregulated. However, I'm still a bull on crypto, and I'm still consistently investing in crypto projects. Buy, hold for the long term, and the majority of people will just do fine. And honestly, ideally, if a crash does happen, that's just a better opportunity for you to buy in more. So whenever that does happen, if it does happen, flood cash into the markets because they are cheaper prices and it just makes sense. And ideally, if a crash does happen, and I know the vast majority of my viewers are between 18 and 40, so you have enough time to actually still recover and save for retirement. So what you do when the crash happens is you just flood money into the market in any stocks that you actually like. And if you don't want to do all that research and due diligence, just put it into an index ETF and call it a day. Only time will tell if this crash will actually happen. However, I'm not worried whatsoever, and I still bet on the American markets. If you made it to this point in the video, I really appreciate it. Like, subscribe, turn on that bell notification because I will be uploading more consistently. And of course, thank you for watching. Good luck in the markets, and I'll see you guys next time.